Greetings, well builders. Welcome to Get Diversified, your go-to podcast for all things real estate investments.
I'm Jacqueline.
Melvin Landry. We're thrilled to embark on this wealth building journey with you.
Imagine this. What if your investments not only secure your future, but also unlock a life of financial freedom? That's what we're diving into on this show. Apartment buildings, storage facilities, mobile home parks, the whole shebang.
But here's the kicker. It's not just about investing. It's about crafting a legacy, building memories with your loved ones, and seizing every moment. Time is the currency of life. And let's be real, none of us wants to waste.
We've got the insights, experience, and dash of excitement to spice up your investing game. Plus, we'll throw in some real-life stories that'll make you see the potential in every brick and mortar.
Subscribe, buckle up, and get ready to turn your investments into the ticket to financial freedom. Together, we're not just building wealth, we're building the community of savvy investors. Let's get diversified.
Diversified. I'm your host today, Jacqueline Landry, and I have a very special guest, a friend and a partner, Brian Ortins. So welcome to the show, Brian.
Thanks for having me.
So Brian gave me this very short, and it really doesn't do justice as to how he introduced himself, but I'm going to go ahead and read it, and I will let him add some color commentary to it. So Brian is a Massachusetts-based licensed real estate investor focused on investing in Massachusetts, Florida, as well as Ohio. So now, Brian, I know you do way more than that. So please take a few minutes to introduce yourself and give me some more color on that.
Yeah, thanks for the introduction. So that was short and sweet, but I'll give a little more context. So I've been full-time for a little over 10 years, started off as a licensed real estate agent, focused on investors, helped some investors build some rental portfolios, got into fix and flipping, have wholesaled, have done small multifamily, and as of 3 years ago, also have an entity that's doing larger, so 40 plus apartment buildings. We are in 3 states, but we are primarily focused in Massachusetts with our fix and flip business and also our wholesaling business. And we are currently just expanding into Cleveland, Ohio, where we think we'll end the year there with somewhere between 200 and 400 apartments within the first year. So that's the high level, and as well as in Massachusetts, are about 300 units in apartments right now.
That's awesome. That's awesome. Well, that's a much better introduction to Brian Ortins, that's for sure. So Brian and I, we belong to some of the same mastermind groups. But what we're going to talk about today, so there's so much that Brian can talk about, as you heard from his introduction. But I want to talk about the types of partnerships, not relationship or partnerships, that you utilize, and definitely add some color in there and kind of talk about why. And let's start with that question.
Sure. Yeah. So what I realized early on as a real estate agent, I was limited to what I can do myself, right? So if I'm helping out clients, I'm not able to go be a project manager in the fix and flip business. I'm not able to just cold call sellers on the wholesale business and build out the systems to do large scale syndication. So every type of investment that I do, if it's fix and flip, I partner with a contractor. If it's wholesaling, I partner with a wholesaler and help him dispo the deals. I also partner with clients on the agency side to take down smaller deals in joint venture. And then the whole premise of syndication is really around partnerships, where now we're using an SEC registered investment vehicle to go out and raise capital to take down bigger deals. So every aspect of my business has some sort of a partnership built in. And that's how I was able to just not only scale, but just hedge the bet as well, where I'm not all in on one avenue. It allows me to scale into multiple avenues. Even going into Cleveland, I had to get partners that are boots on the ground, that already have properties there, that are going to help build out the property management platform. Going into Springfield, I partnered with an investor agent who's helping me flip out there and wholesale, building up some capital while I'm looking for larger apartments. And he's also a commercial broker, so he's sourcing a lot of these apartments for us. So every area that we go into has some sort of a partnership that allows us to move quickly in that market or with that asset type.
So I have a question.
Yes.
How do you find the right partner? Talk a little bit about that.
It doesn't always work out on the first deal. So I've learned that you have to take it a few deals. I have gone in heavy with partnerships that did not work. But the way I look at it is, even if it doesn't work and you have a strong operating agreement, you can always dissolve it, right? So I've dissolved multiple partnerships and there are assets in the partnership. So you're able to at least exit with ideally your money back and hopefully something extra. The only times that I've had issues with, I guess, getting money back or taking a loss has been when we've tried business ventures. So I've gone into markets and did a construction company, did a property management business. So the business side of it's a little bit different than the asset side. So now we primarily focus on assets just so we have something in case the partnership fails.
Got it. Got it. So tell me about this, a little bit about the secret sauce you put into your operating agreements. Like, what have you learned and what are you putting in your operating agreements now as you form partnerships to keep you safe?
Yeah, the biggest thing that's always an issue with partnerships is just roles and responsibilities. I don't want to say that I'm perfect at it, but I feel like I always add something additional every time we start a new one. So like I just formed a new joint venture where I had a young wholesaler that came to me and said, "Hey, I want to start buying rental property. I'm doing a lot of wholesale, but I'd like to start keeping them." So I came in as I guess, the glue that put the deal together. So he's bringing the deals. I'm helping him evaluate the deals, go on the appointments, run the construction. And then I brought in an additional capital partner that brings in the debt and equity. And we're looking to do 100 to 200 units this year. And that was just simply someone came to me and said, "I want to do some deals." He brings under market deals. So just putting the pieces together, but having the roles and responsibilities of who's bringing the money, who's responsible for construction, and just if you spell that out early on, it's never perfect, but it tends to run a lot smoother when you have that spelled out versus just going in and, "Hey, we're all third partners. We're going to figure this out together."
Yeah. Do you put in your operating agreement what happens if there's a dispute and how you can exit, or do you not include that in your
We
operating
do,
agreement?
but yeah, it's really legal language that says if we can't come to an agreement, we'll have to go to a third party, non-represented attorney or arbitrator. So we do, knock on wood, haven't gotten that far. If there was a dispute, it generally, to me, means that the partnership is ending anyway. So it's more about just how do you divide the assets if it doesn't work out.
Got it. Okay, good. Well, that's good. So when I start doing joint ventures, I'll come to you for the operating agreement and for some guidance. So let's talk a little bit about this mindset of partnering versus doing it alone.
Yeah, I would say for me, and again, everyone thinks differently. So you can buy one. Let me take a step back. So I haven't been a W-2 employee, so it's a little different. So maybe if I was a W-2 employee, I probably would have just bought one deal a year with my tax return and just kind of scaled up that way. When I went all in on real estate, then I had to get creative to buy larger buildings. So scaling up to a few hundred units with no tax return is very challenging, or you're not getting favorable terms. So a lot of the partners that I bring on is more so for, I mean, now is maybe a little bit different, but in the past, I'd have to bring someone in to sign on the debt or key principal. I'd have to bring someone in to help raise capital or bring their own capital that they have from a retirement account or some other method. My active income has always been just rolled back into the business to do more flips, more wholesales, more marketing. So I've
Got
always
it.
just brought in more of a financial partner. And so I've always needed someone anyway. So to me, a partnership wasn't something I wanted to do, it was something I had to do to get going.
Got it. Got it. And yeah, some people will look at partnerships as like, well, then I have to split the pie with somebody else. And people may say, well, really, I don't want to do that. Well, then you can choose to do that or not. You just move a lot slower. I think that's one of the things that we learned in 2024 by doing it ourselves, right? So we went from 0 to 7 doors in 2023. And then we went from, 7 or 9 to 70 in 2024. But again, it was building those partnerships. And I think from a partnership perspective, the people that invested in our deals were people that believed in Jackie and Melvin and believed in what we do in the opportunity zones and were on board with our mission. So those are my ACE people, my ACE investors that I know are going to be partners for a long term, for just a long term. ride. Yeah, partnerships are super important. And I think as we continue to grow as an organization, the partnerships will continue to flourish. I know, Brian, we've been talking for a long time about wanting to partner up on something. I don't think the stars have aligned quite yet, but I think we're getting pretty close. So talk to us about.
Actually, I do want to touch on that really quickly.
Okay.
So one thing you just brought up that's a good point is maybe to add to what you asked me earlier, it's maybe.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.